So we're gonna actually invite him. He's gonna be absolutely stunning. But hey, guys, let's be nice, all right? Let's be nice. Let's support him. So Daksh, if you can say hello, man. If you can switch on your camera, say hello.
Uh, Hello. Hi guys.
Okay. Let Daksh please say hello, Daksha. Great, Daksh. You wanna introduce yourself?
Um, so good morning, good afternoon, or good evening, depending on where you guys are right now. So Resh has invited me to share my investing experience, and he has asked me to do a case study on a stock that I recently reviewed. Can I start now?
Yes, dude. Go ahead. Go ahead. It's all you.
All right. Right, I'm gonna share my screen. Okay. Uh, can you guys see this?
Guys, can you see this? Type in yes if you can. Awesome, dude. Go ahead, bro. Daksh. Again, you can see the comment section. You can interact with them, say hello, talk to them. They're gonna be really nice to you. So let's go.
Um, so just before I start, I'll share a little bit about myself. My name is Daksh, and I'm here from Melbourne in Australia, and I'm 14 years old right now. I met Resh in 2016 during one of his seminars, which I attended with my dad, and everyone else there was around 30, and I was like 11. So after that, I went to a 3-day boot camp, and it was one of the best experiences of my life. It was so useful for me, and that's where my journey began. Just a disclaimer, this is just my story. It's nothing special. It's just a bit of success and a little bit of learning. So my journey was, I was introduced to investing from my dad, which I first learned about stock investing when I watched a documentary about Warren Buffett. So my dad and I spent time together on the ASX website, and we started to learn how stocks worked. So soon after this, my dad registered me and himself to one of Resh's seminars, and I joined him, and we attended it. So I've already mentioned after this, I went to his boot camp, and it was one of the best experiences of my life. So you can see in the top left, that's me in 2016. On the right is me in 2017. And then the bottom one was me a week or two ago.
Just dude, a few days ago, man. What, a two ago? It was just a few weeks ago.
Last week? This week? Okay. Time flies. So whatever he taught was so easy to learn. So after that, I played around on a demo account for like a month and a bit, and I just learned the interface and I practiced my learning. And after that, I used my parents' trading account and I bought a few stocks, but with their permission. So right now, I hold 6 or 7 stock holdings, and 6 out of the 7 are positive, and 1 is trading slightly below its buying price. So I think these are pretty good odds for now, and I hope I maintain this in the future. So before I started investing, I made a promise to myself that I wasn't going to let this interfere with all the other aspects of my life. So on the side of investing, I also continued in my studies. I played soccer and cricket outside of school. I learned karate and I learned swimming as well. So the point I'm trying to make here is that it's not hard to learn, and investing is harder than some people perceive. It's not as hard as what some people perceive. So if there's anyone out there who wants to start investing, just go for it. Just make sure you're properly educated and you understand before you start. So in 2018, I moved from Sydney, where I met Resh, to Melbourne, where I'm here right now. And I took about a year's break, and I still hung on to the stocks that I previously owned. And a few months ago, I started to invest again, and I made like 2 or 3 more transactions. So far in my journey, I've done a couple of options, and I've received premium from that. And I mainly focus on stock investing right now. I've cut my loss on 1, and 1 is trading below price, and 6 are currently in the positive. So just before I start, I want to share a little bit about what I've learned on my journey. This is not me teaching you how to invest. It's just a mindset that I picked up, which I think is really useful. If you're starting to invest, these are some key values that you should have. And if you're already investing, I think you should integrate this if you haven't already. So the first learning is that I think you should be consistent. Don't take the same mistake that I did and just have a break. Assign like a good 20 to 30 minutes a day and just read about stocks. See the news and understand the effect it could have on the market. And 20 to 30 minutes a day is not much. Even if you can't find the time, just wake up slightly earlier. In this quarantine period, on weekdays, I'm consistently waking up around 5:45 because that's when the market is open here in Australia, the US market. The second one is what I think is the second most important learning that I found is that don't be afraid and action is important. Take action, but don't be risky. If you find a good stock at a reasonable price, the fear of losing money shouldn't stop you from making the decision to buy. I've made this mistake twice in the past. And a few years ago, I was looking at Shopify. I think I talked to Resh about this as well. I found it at $94, but I didn't go ahead and buy because I was afraid of losing money. And I don't know if you guys have been tracking it right now, but currently the stock is over $750. So if I invested the money then and sold now, I would have made around $3,500. And the same thing happened to me when I was looking at Amazon. It was around $800 a few years ago, and now it's at 2,500. The third thing is that you should be clear on how you want to invest your money. If you're buying to hold, then stick to that. And if you're a regular trader, stick to that. Just running after whatever you feel like will leave you stranded. But this doesn't mean you can't do both. Just make sure you allocate your funds accordingly and you don't overcompensate on one and lose an opportunity on the other one. Focus on industries that you think are worthwhile and that can grow. For me right now, I think these are medical, finance, and tech. I think these industries will always be there no matter what. These like industries can have a big effect on the future. An example of how I follow this is I've seen news that cannabis is now legal in places in the United States and how it'll grow like over 3,000% in the next few years. But I don't buy because personally I see no worth in it and I don't know how it'll have any effect at all. The last one is that I think this is the most important of them all is don't be fooled by hope or fear. Um, this is one of the most deadly mistakes you can make, and I have made it. I know Resh won't be happy right now because he told me not to do it, but I still did it. And because of this, I made a loss on Stitch Fix about a year and a bit ago. This is a blurred out picture of my portfolio. It has a 20% return over the course of 2 years. I have made around $400 in realized profit from options and selling stocks, and around 1,200 in unrealized profit. This is because I've been focusing mainly on trading stocks instead of options for right now. But now that Resh has, I talked to Resh again, and I'm experimenting with options again on a demo account to understand as well as to build confidence, and I'm looking to start option trading again. So enough rambling now. I'll go on to showing the stock. So the company that I've viewed recently is TSM, Taiwan Semiconductor
Doctor, any pause?
Manufacturing.
Doctor, any pause for a while?
Yeah.
Doctor, pause. Hey guys, come on now. Dudes, are those some amazing lessons? Yes or no, guys? Type in amazing if you're amazed. Come on now. Was that amazing or what? Right? Like proper lessons, man. Proper lessons on mindset, on what you should be doing. Dudes, there's so much to learn from this young man. Wow. I love it. All right, Daksha, continue.
So the stock that I've come across recently is Taiwan Semiconductor Manufacturing Limited. The ticker symbol is TSM. Just some information about it. It's Taiwan's largest company and the world's most valuable semiconductor company. Some of its customers include AMD, Apple, Nvidia, Broadcom, and even Qualcomm. They have subsidiaries all across the world in some of the world's fastest growing economies, such as Japan, Korea, China even, and now there's even in the US. So as of me making this presentation, it was around $51, but like in 2 days, it's gone up to 55 now. So I don't know if it's still as valuable as when I made this. So when I research, I look at these 4 specific websites on top of just like news reading. So Resh introduced me to Morningstar and Seeking Alpha, which I still use. And on top of this, I also use Simply Wall Street and Motley Fool. Out of these, Morningstar is personally my favorite. It has lots of financial information and so many companies, like financials in just raw values. Simply Wall Street is more user friendly, in my opinion. It has interactive graphs and clearly shows the pros and cons of a company, and it's clearly highlighted. For Simply Wall Street, however, you need to make an account. It's free, but the free subscription has certain boundaries. So personally, I still prefer Morningstar. So here, this is Morningstar. Um, I've screenshotted approximately only like 30%.
Friend, can you keep quiet, friend?
This is around 30% of the data that I've screenshotted. There's so much more on the website. Most of these values are in like Taiwanese currencies. I've changed some of them into USD. So you can see the earnings per share is $2.67. The dividend is currently $2.49. It has a strong return on equity at 19% and a low debt. On the right, you can see its valuations, and you can look on this further. If you just go to the website, you can see like a lot of information there. So the next one is Simply Wall Street. It's much easier to navigate, in my opinion. And you can clearly show that in the stock analysis report on the left, they break it up into 10 parts from executive summary all the way to company information. They also tackle ideas such as valuation, future growth, past performance, financial health, and dividend as well. So if you look at the top right, the executive summary, it clearly shows a graph where it's strong and weak at the moment. And on the same screenshot, you can see the rewards and the risk analysis. The financial health is the second from the left. It's also very strong. You can see it has all 6 ticks. It's reducing its debt, and its debt is clearly covered, and its liabilities and clearly covered by the amount of money they make. It's a strong dividend stock as well. However, it's not the strongest. It's not in like the top 25% of dividend payers, but it is very close to there. Just like a company, like overall evaluation, it's kind of just like a recap of the previous few slides, is that this company has some very strong economic moats. It's the largest market share in the semiconductor manufacturing industry, and it's around 52% of the whole industry. It's around almost 2.5 times as big as its next biggest competitors, which are Samsung and Intel. It's so big that it can provide so many companies semiconductors very cheaply and efficiently. On a more financial term, it is consistently equal or has a growing earnings per share. It has a very low debt and a high return on equity, and it has a decent dividend of 3 to 4%. Some warnings of this company, though: it has a high PE ratio of 20, and it has a high level of non-cash earnings and is currently overvalued. But the largest buying sector of this company is the smartphone industry, and that is projecting a single-digit percentage loss over the course of this year. So this might be the time to buy, but I think you should wait until it drops slightly more. This is kind of just like overall my case study on this company. Thank you for listening, and if Resh has any questions, he can ask.
Guys, is this absolutely amazing? Right. Oh man, dude, Daksha, I'm so proud of you, man. Dude, great job. Right. So, dude, so again, what's your entry price for this? What price do you want to actually enter?
I'm looking at currently around like $40. It's currently 55. So if it drops a little, they're forecasting maybe a slight drop. Maybe I'll enter then. But currently, I think you should leave it for now. But overall, I still think it's a strong stock.
Yeah, dude, you should also look at the options for this, man. Even the options on this will be amazing. Like, I'm just having a look right now. Like TSM. All right, TSM. Yes, currently trading $55, and yeah, pretty actually very, very interesting. Wow, actually it's very cheap on the call option side. Like if you want to go and buy a long-term call option, Daksha.
I might. I haven't checked the option trading on this yet.
Yeah, dude, if you check out the option tradings of this, like it's actually pretty cheap. And yeah, dude, if you think there's long-term potential, this might be a banger of a stock, like for real. So this looks good, man. Like have a look at that. guys, have a look at that. So again, looks pretty attractive on that front, right? So again, if you think there's long-term potential and stuff, it'd be great, right? So Daksha, who are their competitors? You said,
So the competitors, the two biggest are Samsung and Intel.
yeah.
Um, so Samsung is around 20% of the market share, and Intel is like 13 to 15%. So they're much bigger than most of their most of their competitors as of right now.
And what's the future growth potential? Like right now with the whole COVID situation, are they really benefiting? Are they really growing? Or are they kind of like stagnant? Or are they like, rocketing like crazy?
Currently, they're stagnant because because I said the smartphone industry is experiencing because of like kind of a drop during this COVID situation, and the smartphone industry is currently like their biggest buyers. But like with like new technology coming in with like Internet of Things and 5G or also like coming, I think like this company is like really strong because the semiconductors they provide will be used in all sorts of like technology coming. It's even used in cars, like auto self-driving cars now.
That's cool, man. That's the future of the world, right? Like, self-driving, 5G and everything. So it's very well poised in a very fast-growing industry. It's currently trading still below its highs. Like when the coronavirus hit, it dropped $60 all the way down to about $40. But currently right now it's back up, but it's not exactly at its high yet. So hey, still looking like a good discount and a pretty good play. Daksha, I like this, man. I like this. I like this a lot.
Thanks.
Dude, you're gonna make me money, man, as always. Oh, that's absolutely amazing. Guys, can I ask you all a question? Right? When you all listen to Daksha, you know, when you all listen to Daksha, do you all see like maturity in his thought and in his thought process, investing process? Yes or no, guys? Do you all see maturity? Do you all see like, a proper due diligence he actually makes? All that stuff. Absolutely amazing. Hey, can I ask you a question? Who taught him? Again, it was pretty interesting. Daksha, do you remember what time did we meet in the morning to actually go through this presentation and everything?
I'm not sure. I don't remember.
It was like 6 a.m. in the morning for me, at least. I still remember it was 6 a.m.
I think it was 8 o'clock here before school started.
Yeah, dude. So we were actually preparing this at like 6 o'clock. And like for me, at 6 o'clock in the morning, I was going through everything. I was teaching him options, all that stuff. But hey, man, guys, how many of y'all think he has a bright future? Right. But I wanna actually share something very very important. Besides just me like training him and coaching him, I think a big part of his journey was his dad as well. Dad, you wanna come on in? You wanna say hi? Come, bro. Please, please, please. Hey,
Hello.
that's Eddie. And mad props. Hey, introduce yourself. Please share like how do you actually bring Daksha into the whole investing thing, and what was the inspiration? Like, how do you teach your kids about finance?
I didn't bring him in. He barged himself in. It was around that when I was trying to learn few things, he always had an interest in terms. My interest is on the mindset, and Daksha's interest was whatever I was doing at that point in time. So when Resh, I enrolled for your session.
Hold on.
Yeah.
Could you stop sharing? Could you stop sharing so that everyone can see your face? So stop sharing the screen.
All right, we'll do that.
You stop sharing the screen so that you actually see your face. Okay, now can y'all see him, guys? Now can you see him? Yes.
Aaron.
Yes, tap in yes if you can see. Okay, great. Okay, so continue.
Yeah, so Resh, I was saying that my interest, I don't know much about stocks. I'm a life coach as a hobby, so I do work on a mindset a lot, and that's what Daksh was picking up when I was learning all those things, and I was going to a couple of seminars, and he opted in to come and join your seminar, and I don't know whether you remember or not. He came and sat outside the door to confirm whether he's allowed to step in or not. Yeah. And that was the day. That was the day in Sydney when you said, okay, if he's accompanied by an adult, he was more than welcome. So that's how he came in. Even now, I guess I usually work with him in terms of don't worry about losing money, or don't worry about we can fund the account and all that kind of stuff. But in terms of analysis and everything, that's his own. Fantastic. So I just make sure that he's not seeing money as money.
Yeah.
and whether when he booked a loss on Stitch Fix few years ago, because he bought it, he wasn't sure whether he should buy it or not. But everywhere in the market, it was saying that go buy, and kind of stuff. He said, I want to buy. I said, okay, go and buy it. And if it goes down, it goes down, and it went down. He was skeptical in terms of trimming the loss, and then my job was more around asking him, don't worry about it. That losses are going to happen, and it's part of life. So my work is from that. But if it's about investing, I guess he barged himself in, and he continued moving from that point onwards after he met you a few times. The only part which I still do it is when he gets stuck, I say, okay, message Resh. He may respond soon, he may respond late, but he will respond.
Yeah, dude, absolutely. So important. Hey, guys, I don't know about you, but I'm smiling, man. I'm smiling. And the reason why I'm smiling is because, like, oh, man, isn't this amazing? Right? Like, the whole idea behind how the dad and the son. Again, tell them about the whole ASX thing, how you actually brought Daksha up, teaching him about PE ratios.
Oh, yes. So Daksh has a very keen interest in biographies, and it doesn't have to be one. It could be anything. As long as it's no, I said biography. No, it was not biography. Documentaries. He's very interested in documentaries, no matter what. Whether it is about a person, whether it is about that Apollo launch which happened here, or there have been conspiracy theories, whether it ever happened or not. So he's very interested, or in terms of the food industry, how it is working, and all that kind of stuff. So he keeps on watching documentaries. In that journey, he actually we came across documentary on, I think it was called Becoming Warren Buffett or something. It's a HBO created documentary, and it was
Becoming Warren Buffett.
Becoming Warren Buffett. So he watched that one as part of the documentary, and when he watched it, he was a bit curious about it. What is it? Is it really that kind of stuff? I said, yeah, the stocks can be learned. And I didn't know much about it, so we started learning stocks on ASX. ASX has some free about ASX is an Australian stock exchange for people who are not from Australia. So in that one, I started sitting with him and reading with him. Okay, this is what the stock, this is what a dividend, this is what a share is. We started from those basics. And there was a point in time I was getting too occupied in my work life. So I stopped, and he kept on asking me, when are you going to sit with me again? When are you going to sit with me again? And it went on like this for a couple of weeks. And Daksh finally gave up on me. And one day I saw that he was so fed up. He opened the laptop. He went to ASX. He started reading on his own without waiting for me, because he was losing time. So he started reading further. And that was the first point in time where I felt that he has interest. It was not that he was following his parent who was sitting with him, and it was not to grab attention. It was just he wanted to learn further. So when he started to learn further, and then it was encouraged further with that 2-hour seminar with Resh, which you did, followed by boot camp, and so on and so forth. And the beauty is, I still feel he's interested because he has had a break in between. He has been studying for his competitive school exam to get admission into a premium schools here in Australia, and which he did last year. So he did take a break, but he came back. So which shows that he has interest.
Daksha, I have a question for you, man. Daksha, question for you, right? So there's a lot of people in here who are new investors, right? They're brand new, not like you. You're pretty experienced now, right? So what's your one advice to a brand new investor?
So my advice, like that slide.
Come closer. I can't really hear you. Come closer.
That slide that I have, those are like my main tips, just like if you're starting or if you want to start.
Yeah, so give us one. What's the main one? What's the number one? So I'm brand new, for example. What's the one advice you give me?
Top 2 is don't be like afraid of don't be afraid of losing money, but like don't take like unnecessary risks, like actually do your research. And the other one is don't be fooled by panic or hope. Like just don't be like, oh, just because everything is going down, I should sell it off. Because like recently with the whole like COVID situation, like a lot of my stocks went like insanely down, and if I sold them, I wouldn't have had anything. But like now, if I like just gave it some time, it's back up again. And on the same things, like just because you see like the market's going up, just don't buy an overvalued stock just for the sake of buying it. Like actually see, like, is it a good stock? Like, will it have an effect in the future? Like, where is the room to grow for this?
Oh man, dude, I am so happy. I'm so proud, guys.
I'll
Isn't that
get
amazing?
educated first.
Get educated first. Ah, dude, Daksha, I'm so proud, man. Absolutely amazing, guys. Can all of y'all give him a hand clap, like all around the world, wherever you are? Give Daksha a round of applause, baby. Give Daksha a round of applause. That's exactly what's up, Daksha. Just so you know, there's about 680 people watching from all over the world, and they're giving you claps like crazy. You don't hear it, but let me hear. Let me do it for you. All right. So.
Thank you.
Great job. Guys, how many of y'all want to track Daksha's journey, right? Like when he grows up to be 18, 21 years old, when he starts investing, how many of y'all want to see his growth, right? Oh man, it's going to be amazing, right? I wonder where he'll be when he's my age. It's going to be crazy, man, right? So again, Daksha, you created a Facebook page or something? What's the page?
Little Investor Melbourne. You guys might not be able to find it right now, because I created it like earlier today.
No,
But like,
send it to me, and then I'll let you. I'll let them follow. All right.
yeah, sure. Because like, I'll do some like stock analysis like this, like.
Dude, there's so much to learn. No matter how old, how young you are, there's always something to learn. Even I'm learning from Daksha. I found a good stock today, and Daksha, I'll let you know if I place the trade, man. We can place it together.
Yeah, sure.
Sounds good.
Yeah.
Awesome. All right, man, dude.